What is going on, my good old friends of YouTube? It's Stas here. Welcome back to another video. So it is about to get real for the stock market, and in fact, it's already getting real. All the indexes are down pretty heavily today. It's currently about 1:30 p.m. on the East Coast, and we have the Russell down 1.4%, the Nasdaq's down 1.1%, S&P's down 0.9%, and the Dow Jones is down 1% as the VIX is up over 5%. And if you guys didn't know, this is a major earnings week where we're getting earnings out of Amazon, Apple, Starbucks, a bunch of other companies, which, by the way, we're going to break down a bunch of companies today. And tomorrow we have the FOMC statement, the press conference, which I'm assuming that's kind of why we're selling off right now. We're a little bit, nervous for the, for the press conference tomorrow. So guys, let's break down what's going on with the stock market. We'll talk a little bit about the Fed and break down some earnings reports. So hit the like button, make sure to subscribe, and you might as well check out my Patreon if you guys want to see me build out my private portfolio, and you might as well get 10 fractional shares of the Mag 7 stocks for Moomoo. It is free money, guys. Check out all the details down below. And with that being said, cheers. Let's dive right into the video. I'm actually looking where to put this mug right now because I have this other cup right here. I'll actually put them right next to each other. Either way, guys, let's dive right into the video. So clearly, we've been selling off the entire day today. You guys can see this chart right here is SPY. We opened up at around 5:08, and in the pre-market, we dumped off pretty aggressively at 8:30 a.m. Then we saw a little bit of a rally at open to about 509.50, and notice how at open, we did not take out the highs from the pre-market on SPY here, right? Pretty much the same thing on Triple Q. Let me take a look here, guys, at that. Yeah, we opened up at around, let's see here, 431, then we rallied, but we failed to break out of the pre-market highs, and we've been downtrending all day, right? It's pretty much the same thing on all of these indexes, guys. And going to the 4-hour chart here on Triple Q, it's looking like we're getting rejected under that 180 moving average at a higher low right now. Does it not? I mean, look at this, guys. We have clear lower highs being made. Boom, 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 right? And it's the same thing here on SPY. Let me pull it up and show you guys, which you can see we're failing right under that 180 moving average, right at about 510, 512, which in the short term is not the best sign overall for the bull. So like I said, tomorrow we have the FOMC statement, the press conference, where we're going to get more insight on economy, right? Interest rates, inflation, where Jerome Powell and the Federal Reserve, where they see things going. And as of right now, the federal funds rate is sitting at 5.5%, and that is what it's expected to be at tomorrow, right? It's not like we're going to get rate cuts or hikes. I mean, could you imagine we got a rate hike? Obviously, we're not. But it's expected to stay the same, right? Right at 5.5%, as inflation has been pretty sticky, right? You guys know the narrative to start off the year was that we were going to get multiple rate cuts this year. And of course, you guys know me. I've been skeptical about that. I've said that time and time again here on the channel, and I've been a proponent of the Fed not cutting rates super aggressively, right? The last thing we want to see is inflation start ripping up again. So I'm actually a fan of what Jerome Powell and the Fed, what they're doing right now, keeping the Fed funds rate higher for longer, right? And to really ensure that inflation is going to die down. Ultimately, the Fed wants inflation to get down to 2.5%. And right now, it's pretty sticky. Let's be honest. It's stuck at 3.5% to 4%, whatever it is these days on the annual CPI number. But yeah, the goal is to get to 2.5%, and the Fed is likely to keep rates where they're at longer than expected, longer than what we thought in the beginning of the year, which is kind of why, first of all, we got a huge rally earlier in the year because the stock market was pricing in a bunch of rate cuts, and now we're kind of seeing a bit of a sell-off over the past month as we're realizing, oh, okay, maybe we're not going to get as many rate cuts, but obviously it's an election year. I don't think the stock market's going to crash. I doubt that we do get a crash. crash, who knows? But I feel like this will rebound. Time will tell. We're actually already rebounding off the lows. I mean, if you guys didn't realize, SPY was under $500 about a week ago, 10 days ago, and now we're pushing over 500. So we are looking pretty decent off the lows from recently, but again, we're failing to break out of the 180 SMA, which kind of puts us in this interesting scenario, which really we got to now wait till the FOMC and all these earnings to come out to see what direction we end up picking. So if you guys didn't know, we have a lot of companies set to report earnings today. They already reported in the pre-market. Some reported yesterday. So after the bell today, we have Amazon, the big dog, which of course I'm long. I've owned this stock for about, I think, a year now, maybe over a year. Yeah, over a year, because I bought this in 2023 in the $80, $90 level. And let's just say we're freaking crushing it on Amazon, guys. I'm up a ton on this stock. We're almost up, I think, like 70% on my position, 60%, something like that. I also averaged up on the position, believe it or not, in the 170s recently, because that's how bullish I am on Amazon over time. And yeah, I'm long, man. I'm long. And they report earnings after the bell, guys, and the stock's at 0.8% in the red right now. And of course, I'll do another video breaking down the earnings, but Amazon's at the top of the watch list right now. Same with Advanced Micro Devices, which, guess what? They're also set to report earnings today, guys, after the bell. So keep your eyes on them, as they're pretty much at break even right now ahead of earnings. And the companies that already reported earnings this morning, guys, include PayPal, AMD, and actually, wait, Starbucks is after the bell. That's another one that's today after the bell. You guys can see here, Starbucks stock, man, this thing is beaten down massively from 107 to 88. It's down 18% in the past couple of months, actually 6 months pretty much. It's in a bear market over the past 6 months. So we have Starbucks after the bell, and what we had in the morning, we had PayPal, and we had what's the other one? McDonald's, a couple other ones. I think Coca-Cola. What's the other one? 3M, a couple other ones. Maybe Eli Lilly. No, actually, no. I don't think Eli Lilly was. Actually, no. Yeah, they were today. Their stock's actually popping up over 5%. Let me show you guys the intraday on this. Actually, they might have been yesterday. Either way, Eli Lilly is ripping. Let me see what they reported, guys. Looks like they did. Looks like they did. EPS adjusted of 258, which beat the 246 expected, but sales missed. 8.76 billion versus 8.92 billion expected. And it looks like here Eli Lilly shares are trading higher after the company raised its full year 24 guidance. So that's actually really good news for them. And again, we're up over 5.5% on the stock today, breaking above the moving averages and pushing to $800, which was the high from a couple of weeks ago earlier in March. So Eli Lilly looks really good. We also had earnings out of PayPal this morning, guys, which their stock's up over 2%. And at one point, it was up to $72 per share. You guys can see at one point, we were up around 8 to 9% on PayPal stock, which, full disclosure, I don't own PayPal. I used to own it, made some money on it. I sold it years ago. But I'm just watching it now, keeping an eye on it. Why not? I'm not planning on buying PayPal, but I'm just watching it, tracking their earnings. So it looks like they did adjusted EPS of $1.08 versus the $1.22 expected. So that missed, and that's based on new non-GAAP methodology. I actually have to look into that. But it looks like they missed the $1.22 estimate, and sales beat $7.7 billion versus $7.51 billion expected. In Q1, total payment volume was $403 billion for PayPal. Let me see here, guys. Sees Q2 adjusted EPS up low to double digits. Sees Q2 net revenue up 6.5% to 7%. Pretty good guidance there out of PayPal. Probably the reason why the stock is moving here. So yeah, looks like Susquehanna adjusts PayPal Holdings price target to $71 from $65. They maintain a neutral rating. All right. Any other analysts here? Not seeing anything else. But yeah, not bad. Pretty good guidance out of PayPal, and their stock is moving. And by the way, guys, this stock has subtly been uptrending over the past couple of months, since October, and it's actually up from $50 to now almost $70. It's actually up 36% in the past roughly 6 months, a little less than 6 months, either way, right in that ballpark, which is nuts. Actually, no, might be right exactly at 6 months. Either way, we're making a big move on PayPal. Momentum is continuing, and we actually just hit a high on this chart. Kudos to the PayPal shareholders that bought the dip here. Again, I didn't, but if you did, kudos to you. And the last stock we're going to break down today, guys, which was everybody's favorite as a kid, maybe still, I don't know, do your thing, guys, but it's McDonald's, ticker symbol MCD. This company reported earnings in the morning, and they ended up doing, let me see, adjusted EPS of 270, which missed the 272 expected, and sales beat barely, but they did beat 6.17 billion versus 6.16 billion expected. Anything here on guidance, guys? I'm not seeing anything on guidance, but overall, the stock is pretty flat. It looks like here Q1 global comparable sales growth marks 13 consecutive quarters of positive comparable sales growth with 30% growth over the last 4 years, which is nice for comparable store sales. Not bad. And yeah, we're down on the stock, guys, from the recent highs, but on the day, we are up about 50 cents, which isn't much for a $270 stock. But hey, you can't complain. McDonald's is looking pretty decent, holding up above what the indexes are doing today, which is pretty good. And here on, let's pull the 3-year chart up. This stock, yeah, it looks like we're pretty much right at the bottom trend line right here, right at the 180 moving average on this 3-year chart. Let's see if we get a pop and maybe a continuation on MCD. So yeah, guys, that's pretty much it for this video. Let me know your thoughts in the comments down below. Hit the like button. Don't forget to subscribe and check out my Patreon at StockSurfest.com/Patreon. You can check out the QR code right here or go to StockSurfest.com/Patreon, link down below. You get access to my private Discord chat, my private portfolio, my charts throughout the day. All of that good stuff is on Patreon, so get on it, guys, and you might as well get your 10 fractional shares of the Mag 7 stocks from Moomoo. That is a $50 value. Use that link down below. Check out the QR code right here or go to StockSurfest.com/Moomoo. Open up your account and fund it with at least $100. That's when you get your stocks, and you can simply take out all your money after if you don't like the platform, which I think you will. But you guys decide what you want to do. Get your money. Link down below. And with that being said, cheers. I'll catch you later.